the single candlestick patterns. Before watching this video, I would request that you watch the technical analysis introduction video to gain a better understanding of this video. I will give the link in the description below. The transactions between the buyers and the sellers form a candlestick. As a result, the shape and the characteristics of each candlestick provides traders with significant information about the current market sentiments. This also helps the traders to understand whether the buyers or the sellers are in control and whether the market is in a trend, consolidation or reversal mode. To be a successful trader, we must first analyze the trend and then trade in accordance with it. These patterns are just one way that we can understand the trend. However, we should not rely only on these patterns to understand the market's directions. Now let us discuss the single candlestick patterns. As discussed in the previous video, the main single candlestick patterns are Marvosa, spinning tops, doji, shooting star, hammer and hangman. Don't worry about the names for now. As the Japanese invented the candlesticks, the majority of the candlestick names are in Japanese. Let us understand a Marvosa candle first. A Marvosa in Japanese means bad, which represents candles with no shadow. There are two types of Marvosa candles. One is a bullish Marvosa and the other one is a bearish Marvosa. A bullish Marvosa candle indicates a green candle with no upper and lower shadow. This means that for a Marvosa candle, the open and the low price will be almost the same and the high price and the close price are also almost the same. A bullish Marvosa indicates that there is so much buying interest for that particular stock. Here a person who is following this pattern could buy the stock at the close of the Marvosa candle and his stop loss will be at the low of the candle. Also please note that there is no guarantee that each time the Marvosa works. So it's always advisable to trade with the stop loss as trading is a probability game. Bearish Marvosa is just the opposite of the bullish Marvosa. This indicates extreme bearishness in the stock or the index. Here the open price is almost the same as a high price and the close price is same as the low price. A trader can initiate a short trade after confirming the bearish Marvosa candle, keeping the stop loss as high of the candle. Now we will discuss about the spinning top candlestick pattern. Even though the spinning top doesn't give a trader a trading signal with specific entry or exit point, it gives out some useful information about the current situation in the market. A spinning top candlestick has a real small body and the upper and the lower shadow are almost equal. We will understand how this candle is formed from a buyer's and a seller's perspective. The small real body means that the open and the close prices are almost near. Here the color of the candle doesn't matter. The upper shadow tells us that the bulls tried to take the market higher. However, they were not successful in doing that. The lower shadow means that the bears tried to take the market lower, but they were also not successful. So, if we combine all the three, a spinning top shows that neither the bulls nor the bears could establish any influence on the market, and as a result, it shows indecision and uncertainty in the market. A spinning top formed in a downward trend means that either there would be another round of selling or the market could reverse its direction and the prices could increase. So the spinning top can be considered as a pause to the current trend. A spinning top formed in an uptrend also has a similar story. The bulls were having the complete control in an uptrend till a spinning top is formed. This is an indication that the bears also entered the market and is giving an equal fight to the bulls. After the spinning top, where the market will be heading depends on who wins the fight. So to sum up, the spinning top candle shows confusion and indecision in the market with an equal probability of reversal or continuation of the trend. Now let us understand the doji pattern. The doji candles usually don't have any real body, which means the open and the close prices are almost equal. Also the upper and the lower wicks can be of any length. Like spinning top pattern, doji also indicates the indecision in the market, that is, neither the bulls nor the bears can influence the markets. This means both the bulls and the bears are in equal power. So the market could swing either way and we need to build a stance that adapts to the expected movement in the market. Next we will discuss about the paper umbrella. A paper umbrella consists of two trend reversal patterns, namely the hangman and the hammer. The interpretation of paper umbrella changes based on where it appears on the chart. If the paper umbrella appears at the bottom end of the downtrend rally, it is called the hammer. A hammer can be of any color, that is, it can be red or green. Before the hammer formation, the prior trend should be downtrend. This means when at the lower point, some amount of buying interest emerges in the market which pushes the prices higher. The price action on the hammer formation day indicates that the bulls attempted to stop the prices from falling further. This action by the bulls has the potential to change the sentiment in the stock or the index. If you want to take a trade based on the hammer pattern, then you could take a long position after the candle closes, keeping the lower end of the hammer candle as a stop loss. If the paper umbrella appears at the top end of an uptrend rally, it is called the hangman. This is just the opposite of the hammer pattern. A hangman is valid only if an uptrend precedes it. Since the hangman is seen after a high, the bearish hangman pattern signals a selling pressure. Like a hammer, the hangman can also be of any color. The hangman signifies that during the uptrend, the bears have managed to make an entry. This is emphasized by the long lower shadow of the hangman. The entry of the bears signifies that they are trying to break the stronghold of the bulls. Here you can take a short trade once the candle closes, keeping the stop loss above the candle. Now let us discuss the shooting star pattern. This is the last single candlestick pattern that we are going to learn in the single candlesticks. The shooting star looks like an inverted paper umbrella. Unlike a paper umbrella, the shooting star doesn't have a long lower shadow. Instead, it has a long upper shadow where the shadow's length is at least twice the length of the real body. In the shooting star also, the body color doesn't matter. The prior trend before forming a shooting star would be bullish trend. The thought process behind this pattern is that when the shooting star is formed, the market as expected will form a bullish candle at first, making a new high. However, at the high point, there is a selling pressure which indicates that the bears have made an entry and they were actually quite successful in pushing the prices down. The expectation is that the bears will continue selling and hence the traders could look for a shorting opportunity once they see a shooting star. So a few points to remember about the candlestick patterns are, these patterns need not happen exactly in the same way 100% of the time. These patterns could be highly probable trades. Always trade with the trend. Means if the trend is bullish, then better to find the bullish trades, and if the trend is bearish, find the bearish trades. You can always combine the candlestick patterns with other strategies to achieve greater results than relying simply on the candlestick patterns. So we will discuss about the multiple candlestick patterns in the next video. So that's it friends. Hope you got some information from this video. If you like these kind of contents, please consider to like, subscribe and share these videos. Thank you for watching.